Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Hello learners, welcome back to another video. This is your friend Vivek Bajaj. I'm in financial market for more than 20 years and my passion is to learn, see so many books behind me and also share learning through my YouTube channel. There is no other agenda, there is no influencing which I am doing. I am just sharing my knowledge because I love to do that. If you have joined me for the first time, you can prefer to join me permanently by subscribing to my YouTube channel. Today, I'm going to talk about a very interesting topic, which is US debt. You remember in a couple of previous videos, I talked about yen and how yen could actually lead to some kind of a global turmoil, which can impact your investment also, right? And in that video, I discussed about how Japan is selling US treasuries because there is an increase in interest rate in yen and most of the money now is going back to Japan as a reverse carry trade. Okay. Today, an extension of that video discussion, I'm going to talk about US net debt. I read this and I was shocked that US now has $1.4 trillion of interest bill to be paid every year. That's quite a large amount, okay? The total US borrowing, US government borrowing, is almost $40 trillion. That's again very large, which is almost, I think, 120% of their GDP. The interest payment is now, the interest rate is almost 3.44%. So the borrowing which US government has now, they have to pay interest at the rate of 3.44%, which is the interest rate accumulated over a period of recent years. And every second, 91,500 worth of debt is getting added in US economy. This has gone up by 3x since 2020. So not very old story. In last 6 years, this whole interest payment liability has gone up by 3x. Scary, scary. So I'm sure you're looking at the presentation. If you look at this slide, right now the number is around $1 trillion, which is expected by 2036, which is 10 years from here. This number will go to $2 trillion every year, right? What is peculiar about US debt market is that almost 33% of US debt or the borrowing has to be repaid within 12 months. That means there is a liability which is always there because there is a debt repayment which is required, plus there is an interest obligation. So the whole outflow requirement from the US economy will be quite high and it is increasing at a compounding level because of high increase in debt. The interest rate in debt, which was 1.48% in 2021, is right now 3.44%. That's quite reasonably high. If I look at the US budget, how much money goes for what purpose? The top purpose of US budget allocation is social security, almost $1.62 trillion. Second is Medicare, because a lot of money is spent in US to give medical support to their population. It's 1.1%. Third is interest. So now it has crossed their defense budget. US defense budget was always supposed to be very, very high because they are always there creating an ecosystem which is supporting other countries like NATO and other countries where US is obligated to support them with their military base. Now the amount which has to be spent on interest has crossed their defense also. And it is believed that in next 10 to 20 years, interest payment is going to be the top budgetary allocation for US. Just think about it in your home if this happens, that your certain expenditures is there and your interest obligation towards those expenditure has now crossed. Now your core expenditure, which is roti kapda makan, now suppose your interest payment, your EMI payment crosses the roti kapda makan threshold, then what will happen to your family? Your family is going to leap towards bankruptcy, right? Can we assume that US is also leaping towards bankruptcy? Well, you can assume that, but then US has the strength of having dollar as their pillar of support. Now people remind that dollarization or the dominance of dollar in the global market ever since the Bretton Woods system was abolished and gold nationalization happened. That has been a major reason why US economy has been able to sustain all the crises which it has seen. Hello, my name is Vivek Bajaj. I have more than 20 years experience in stock market, and I can suggest you, if you are serious about stock market, download Stockage app. It will really help you in your journey of wealth creation from stock market. What would America actually have to do? What can America do? Assuming that the task is $1.3 trillion a year. Okay. And this has not happened for the first time. This has actually happened earlier also, that America has also tried to do certain things historically. When US debt was 106% of the GDP, it actually fell to 23% earlier historically. So from 1946 to 1974, there was a reason that fall happened. And if you broadly conclude as a summary that what are the way out for US, number one, when their growth will cross the interest rates. So if the growth is very, very high, typical mathematics, if the growth is high and interest rate payment is low percentage terms, then obviously the deficit because of interest rates will go down, which will help the economy to recover. Number two, if interest rates are kept down by the policy, because increasing interest rates is actually counterproductive, because the more interest rates is increased, the worse it is for their net interest obligation, because that interest 3.44 is also increasing because of renewal of debt at a higher interest rate. Okay. Third is budgetary surplus, which is basically by increasing the tax, which looks like a very difficult proposition in US, considering that it's a consumption-driven economy and no political party want to touch that piece of increasing taxes. And if you do combined impact, which is including a bit of growth, a bit of interest rate, a bit of growth, then probably the things can work in their favor. But at this moment, there is quite a possibility that something is going to happen with dollar. Okay, what? Does dollar have to be devalued? Now, this is a serious discussion happening everywhere, and now I'm hearing videos where the regulatory bodies, the governing bodies in US, they've also started talking about it, that probably they want dollar to become weakening, because the weaker the dollar, the better they will be able to manage this debt. Let's see the chain of reasoning. A debt only matters next to the size of the economy. 40 trillion is the frightening, because the economy is about $31 trillion. Okay. Striking the debt itself will take roughly 1.3 trillion in a year in tax rises or spending cuts. No party will do that. Number three, so the only route left is to make the economy bigger in dollar terms. Real growth adds about 2% a year. Rising price must do the rest. इसका मतलब weaken the dollar so that prices go up. Prices go up, so the in terms of dollar, the economy actually goes up. A cheaper dollar is the surest way to get those rising prices. Everything America import costs more and prices spread out from there. Cheaper dollar will lead to increase in prices of everything, like weaker dollar is going to increase the prices. Import will go up, which essentially will lead to increase in GDP. It is also quietly cuts the real debt. Foreigner holds 9.3 trillion of it, and they get repaid in dollars that buy less than the ones they lend. So if the dollar becomes weak, obviously the payment requirement to the foreign borrowers or foreign lenders will also be lesser. America has already done this twice. In 1971, Nixon did it, literally by moving away from gold standard. There was a path of dollar devaluation, and in 1985, five governments agreed to push the dollar down. It fell about 40% in 2 years. Japan cut rates to cope and blew a bubble. And Japan crisis actually was instigated by one of the actions from US, which was devaluing its currency. Okay. So how will this impact all the asset classes? Now, if the dollar goes down and if interest rates have to be kept down, which right now is very high, it's almost 5.3%, a 30-year, which is 19-year high. A record, dollar goes down, then obviously gold goes up. There's an inverse relationship between dollar and gold. Stock prices, stocks are also kind of very high right now. In fact, US stocks are doing very good because US corporates are doing good. Corporate earning in US, the yield is almost 5%, which is equivalent to the 30-year bond yield. This is quite a unique situation. And thanks to, I think, AI dominance of US, they have been able to create a record for themselves in terms of profit growth. The US economy is not showing. That is the unique thing. Even though there is crisis, which is more macro in nature, but in terms of micro, US economy is not in crisis. Most of the countries globally are facing higher interest rates. Chahe Germany hai, Japan hai, everyone. Why? Because of high inflation led by all the war disruptions happening all over the globe. So what should India do? Where are we on this? Now, you always remember there is a macro view in India, there is a micro view in India. Okay, macro view in India is generally dominated by how currency is moving, how inflation is moving, how the interest rates between India and US is working. Now, India currency, we all know that has been weak. The spread between interest rate, 10-year interest rate of India versus 10-year interest rate of US, which was 4-5% earlier, now it has come down to 2%. So the incentive of foreigners to invest in India is very, very low, because if they are getting higher interest rate in US, why will they invest in India? Having said that, if interest rates in US also goes down, dollar also goes down, that means the spread 2% will expand, which will be good for our country. Okay. There are problem statements also in India, which is the oil. If oil prices continue to go up, that's a problem for us. Money is moving out of India, maybe because AI story is not there, maybe growth is not there, etc., etc. Now that is obviously the negative, which can lead to market to go down. But my sense is, considering that Indian market has underperformed for the last 2-3 years vis-a-vis emerging market, and that whole story of no AI, nothing is already there in the market, so there is nothing surprise which we all now have. My feeling is that Indian market is now poised for some kind of a upside. Okay, and that will only get confirmed once dollar index confirms this action from US government, and the action is dollar index goes down. And look at the chart, dollar index is actually trading below 100. So if US has to save itself from long-term catastrophic crisis, then I think, sorry about this, then I think dollar index has to go down, or US interest rates has to stabilize or has to go down, because dollar index and US interest rates are, yield is quite related. It's not possible that US yield will go up and dollar index will go down. It is until unless the government decides one day to devalue currency overnight, which is not a possibility because US currency market is very mature. So government will not take bold steps like these where they will just devalue the currency. But naturally currency looks like is getting into the devalue zone, which is good for the emerging markets, good for the risky assets. So yes, if you are bullish about India, I think the timing is quite right, and Indian market is also showing resilience. You look at the small cap index, small cap, mid cap index, everything looks very, very positive at this moment. Yes, a small concern for me is that Nifty trading below 200-day moving average, which is 24,377. But this time I think if it is crossing this number and dollar index stays below 199.98, then we are in for some good rally, hopefully, in Indian market after a long period of time. This is again my guesstimates based on data. I am not uh, uh, I'm not someone who can predict the future. मैं astrologer नहीं हूँ, but I can only say based on data that things are looking slightly more positive than it was a couple of weeks ago. All right. Thank you, friends, for watching this video. I hope you enjoyed the conversation. I enjoyed this thoroughly, and you're going to share this with your friends and family so that all of us understand the big picture, why US has to do something which can lead to something for Indian market. Having said that, always remember, Indian corporates have to perform for continuity in stock market growth. If Indian corporate doesn't perform, then that's a problem. I feel Indian corporates are ready for outperformance in last few days. Thank you so much. Bye. Take care. Jai Hind.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.